We don't just build wealth, we build legacy. Welcome to the Retirement Income for Life show with Doug Vincent. For over 30 years, Doug has helped families right here in the DC area turn hard work into lasting income, helping you protect what you've earned, provide for your family, and retire on your terms. This is where preparation meets opportunity. This is the Retirement Income for Life show. Here's Doug Vincent.
Retirement momentum, staying focused on finances, a practical look this week at habits, discipline, and the small actions that can help build long-term financial confidence. Welcome to the show. This is Doug Vincent, and we are excited to be back in the DMV. Shouting out to all our listeners here in the DMV area, which we have been receiving all your questions, comments, scheduling those appointments, doing those consultations for our listeners. And we just look forward to continuing to help you in any way possible. As always, go to our YouTube channel, Retirement Income for Life, and you can also see past episodes of our show and, like, share, and subscribe. Don't hesitate to call us as we are helping listeners and callers in our Greenbelt office in person or by way of Zoom. Phone number 301-242-3950. And always don't hesitate to visit our website, which is retirementincomethenumber4life.com. And so we look forward to continuing to serve you as any way we possibly can. And so for today, we want to dig into some topics that come up a lot of times as we're approaching mid-year, as we reach June. You know, we have those financial goals that we had set back in January. And so we want to discuss how you don't lose momentum throughout the rest of this year. As we get to the end of this year, we want to be able to look back and know that we've reached our financial goals. Also, build along the way, you want to build better money habits as you're setting those goals. And we'll explore how small financial behavior can compound over time. We want to help strengthen your retirement readiness, as you should set these short-term, long-term goals and, build good money habits. You want to be on track for retirement success and be ready for that. Also, we'll look at some of the ways you can automate, your contributions to your 401k and other contributions that you can make in different accounts. You want to automate those so that you're taking the emotion out of these important financial decisions. And then, finally, we'll wrap up today talking about how professionals, can help you with your accountability. Okay. You want to have professionals that you are working with on a weekly, monthly, yearly basis that can help keep you accountable. We'll talk about the value of having a trusted partner or partners to help keep retirement plans aligned with your long-term capital, your long-term goals. All right. Also for today, our as we've been giving you a quote of the week, our financial wisdom quote of the week is coming from Mr. James Clear. And he says, success is the product of daily habits, not once in a lifetime transformations. So daily habits is what's going to produce success, not this big lottery win or something that happened once in a lifetime. Success is the product of daily habits, not once in a lifetime transformation. So we look forward to assisting you in that lifelong process, the daily good habits. And as I said, this is June. And we want to make sure as we approach this halfway point of 2026, you want to take a look back, hopefully back in January, like a lot of us, we set goals and you might call them New Year's resolutions. I'm starting to call them objectives instead of goals now. But you may have set goals to save more money, right? You said, this year I'm going to reduce my debt. I'm going to continue to contribute to my retirement accounts. And, my overall financial picture is going to change this year. Now, it's June. How's it going? All right. You're 5-6 months into this thing, a lot of people is, the momentum starts to fade for a lot of people. Hopefully that's not you. Okay. Hopefully you are on track and you're moving forward. But if that is you, the good news is there's still plenty of time left to make the progress that you wanted to make. All right. You haven't run out of time. Okay. Don't give up. June is a great time to review your financial goals, right? You want to assess the the progress you've made. This is let's call this a natural checkpoint, right? Retirement planning rarely follows a straight path. Okay, you're going to have income changes, expenses that are going to shift. Your priorities are going to evolve throughout the year. And so as you look now back to January, all the way up to June now, small adjustments, made now can make, a meaningful impact as you get towards the end of this year. Okay. And so progress is always going to beat perfection. Okay. Making that daily, that weekly, that monthly progress is going to beat a perfect plan. Right. And so successful savers, they rarely make perfect financial decisions. Okay. They review their goals, they make adjustments, they keep it moving forward with consistent action, that often matters more than, once again, these big dramatic changes, that they're always difficult to sustain. Okay. The consistent action, the monthly contributions, the daily, stick-to-itiveness to the plan that you put in place is always going to trump that one-time, contribution, So let's look at a few numbers that are some good statistics, related to Americans today. There are 6 out of 10, or let's say 64% of Americans that are being surveyed and polled that say that they have financial resolutions that they're going to put in place for this year. So 6 out of 10, have said, this is my year, right? 71% of Americans, are saying that they plan on reaching this year. I plan on reaching my financial goals. Okay. So even more, we're building on that. And, this is even another good statistic. Only 31% of Americans, when they're polled on describing their relationship to money, only 31% are saying they feel stressed out about this. Okay. So what category do you fall in? Did you set a plan back in January that you're following, or are you committed to making good financial decisions where you are absolutely committed to putting a plan in place this year? Hopefully you are not in that camp of the 31% that is just stressed out. But if you are, it's okay. Look at moving forward and look for a reset. Okay. Don't wait until January 2027, to reset your goals. Let's make some small improvements today, and this will create momentum, for the rest of this year. So once again, if you need help reviewing your retirement plan, your saving strategies, your long-term goals, we are here to help you. This is what we're doing on a daily basis. Reach out to us if you are personally listening and you are in the DMV area. You can reach out to us by way of phone, 301-242-3950. You can also reach out to us on our website, retirementincome4life.com. We do personal reviews. You can come in our office in Greenbelt, or if you feel more comfortable with Zoom, that is fine as well. Okay. And so don't hesitate to reach out to us. Don't hesitate to let us know, how you're doing related to your personal planning for 2026. All right. Along the way, with those type of plans, you want to assess, am I building good money habits? Okay, my habits connected to money, are they good? Are they bad? Where do I fall as it relates to the habits that I'm putting in place related to my money? As we continue to emphasize these small actions, these small actions that you are taking related to your money can produce big results, down the road. So many people think retirement success comes from picking the perfect investment or trying to time the market correctly. In reality, some of the most important retirement outcomes, they're driven by everyday financial habits, which you create on the daily or on the weekly or the month, the small things. That's going to create that significant momentum over a long period of time, and you'll see those significant results, right? You want to make good decisions related to your money in ways that make these decisions a lot easier. You're consistently saving in an automatic process, right? You want to remove the temptation of how you might feel, or, spending too much, or saving later. You want regular processes that you've put in place, so that these problems, when they show up, you already have the habits built in, right? The small retirement contributions add up over time. The monthly, what we call dollar cost averaging, is going to add up over a consistent period of time. This also creates momentum for you, okay? Successful savers are doing this repeatable, okay? This is a repeatable process. You're taking the drama out of this. Financial changes are going to happen. It's going to be ups, going to be downs, but you want to take the drama out of this by way of consistent, momentum. And this doesn't have to be complicated. This is just a plan that you put in place. It'll be very effective as you continue to see the momentum build, right? As you start doing these repeatable things, over and over, as you're repeating this, right? You're going to be more satisfied with your decisions. You're going to see the momentum that's building up, right? And you're going to build that momentum, and it's going to get good to you. You're going to be more confident, and you're going to see the clarity in why you did this in the first place. Now, these good habits, and as you're building better money habits, they're going to compound. Your good habits compound, just like the interest in your investments compound. Okay, so money is not the only thing that compounds. Okay, good financial habits and choices that you're making related to your money, that's also going to create momentum and create compounded, let's say, interest, so to speak, within your financial habits, right? Saving regularly, that's a good habit. Okay, spending intentionally, that's a good habit, right? Staying engaged with your plan is only going to create benefits that build year after year. Okay. And so, those financial habits that you continue to compound, you will see the plan come to pass the way that you are hoping that it would. So here's some more numbers related to, a survey of about 3,000 people, and what they're concerned about today. And this may be you, and this is also a reason why building good financial habits and putting in place good saving habits is important, because as you know, right now, think about it, our gas prices higher today. What about groceries? Are they higher today? As you think about the money coming in each month, are you more concerned about, are you having more month than money, or you have enough money, to take care of your expenses, your needs, your desires, your variable expenses, right? 45% of Americans are concerned about these everyday prices. It's a top financial concern for a lot of Americans today. 4 out of 10, are really concerned that my money is not meeting my month. Okay. And if you do some surveys, related to grocery prices, nationwide last year, groceries were up 3.3%. Okay. So it's becoming harder, to make sure that, my food, my gas, what I'm paying for, different day-to-day expenses, they're getting more and more expensive. So when we talk about building good financial habits and choosing different habits to build upon, we want you to focus in on just building one good financial habit at a time. How about saying, okay, for the month of June, I'm going to add a great new financial habit, something that I haven't habitually been doing. And then in July, I'm going to add another one. Okay. So these small changes, they're real easy to maintain if you don't try to do lifestyle major overhauls. Okay. You just imagine if you added one good financial habit per month. Okay. You get one in June, July, August, and so on. By the time you reach the end of this year, you really have a firm foundation on how you've built good money habits. And so one of the things that, as I continue to emphasize, we're helping people build those better habits on a daily basis, helping you create confidence, today, tomorrow. And if you need help creating a retirement strategy that fits your goals, okay, visit our website. All you have to do is enter in your contact information and we will reach out to you. And also, you can, on our Calendly link, you can set up a Zoom meeting or an in-person meeting if you're here in the DMV. So right on our website, retirement income, the number 4life.com, or you can reach us at 301-242-3950. Also, for those of you that are interested in, some more information related to retirement planning, we have a free download that you can access as well. And we call it our Retirement Income for Life Survival Kit. And this is a download that's going to walk you through and prep you, for our meeting. A lot of things that we do with you, you'll already be prepared for. If you download that free resource, it'll help kind of guide you down the path of wherever you might be at this point. All right. So let's build on those good habits as we think about small savings, creating, good momentum. You want to assess your budget and find out where are places I can cut costs. Okay. Where is your money telling you what to do on a monthly basis? And where are you telling your money what to do? If you didn't know you spent $200 at Starbucks last month, and that's your, normal process, then you don't have good cost cutting strategies, kind of lifestyle changing strategies in place that could be easily implemented. How much did you spend on fast food, or Uber? Or, your internet bill, your cell phone. Where are areas where you can cut costs and it's just a normal lifestyle of you creating savings by way of debt reduction and attaching them to your future goals? A way you can assess that is go back through your last 3 bank statements. And I want you to do an analysis on what money came in, what money went out. And I want you to tell me, I want you to, call me, let me know where is your money and how much is your money telling you what to do that you didn't even realize, right? So a few dollars saved here or there can be significant, over time. If you could, save more money related to, repeatable expenses that you cut out, you could really have a dynamic savings plan. And a lot of times it's things that we don't even need, like these monthly subscriptions, go unnoticed, sometimes insurance premiums we're not sure of, I mentioned, cell phone or internet, these streaming services, common services and common areas where it doesn't seem like you're paying that much, but you may have 10 automatic drafts coming out, like I said, you may be eating out more than you anticipated. You may be paying more for coffee or whatever it might be, but these small recurring expenses can add up over the course of a year. And before you know it, it's like, where did my money go? Right. So another area that you may want to assess, and that's, your healthcare. Healthcare costs matter more in retirement, right, than, they might while you're working. And healthcare is going to remain one of the largest expenses that retirees are going to face. So you gotta be careful there as it relates to, are you monitoring in a retiree's case, Medicare, what are the tools to help maintain your prescriptions and drug costs, keeping those down? reviewing your drug plans and understanding, the payment options that might be able to help you reduce, any financial stress around healthcare, insurance, or Medicare, or even in a lot of cases, long-term care. Provisions need to be put in place for that as well. Medicare does not pay for a premium or a monthly bill at a nursing home. And a lot of people don't know that. These are things that you want to review. And then as you identify them, you want to redirect savings towards certain goals or certain pivots that you might need to make as you get older, as you are concerned about different things that may attack your fixed income as you get towards, retirement. So here's some, just some quick savings goals that, as we're talking about building momentum, that I'm sure you can find as you do that analysis on, is my money telling me what to do, or am I telling my money what to do? And that's, how about just set a goal to save $50 more per month every single month. All right. So that's a small goal. I'm going to save, if I'm not saving anything, I'm going to start with 50. If I'm already saving $250 a month, I'm going to move that to 300. Right. And so monthly over time, this consistency of you redirecting these extra dollars to retirement accounts, emergency savings accounts, you're reducing debt because you're watching, your spending, and you're going to start to feel more confident about, your financial future while you strengthen your financial flexibility. We want flexibility as we move into, our retirement years. And, it's very important that you are, putting these type of small wins in place. Right. So over time, momentum, as you're building this momentum over time, you're going to potentially find thousands of extra dollars that you've saved per year by just putting these small habits in place. Okay. And, as we continue to, think about Medicare and, Medicare reform and the different costs that go along with that, you're going to have to really, as you approach retirement, that's going to be potentially one of the highest costs for a retiree as they go into retirement. So just a couple stats on that is for 2026, the new annual Medicare Part D, which is the out-of-cost prescription cap, the high, for that is $2,100. Okay. And that's something that can be, paid, per month. You can kind of handle that, over a course of 12 months. But the cap right now is $2,100. Now, let me ask you a question. Do you think that's going up based upon, our economy and our society? Do you think Medicare and healthcare expenses are going to be higher or lower, going into 2027? If I had to guess, I would say, Planet is potentially going to be higher. All right. Now, 1.5 billion Americans, right, are, their savings are generated by Medicare reform. So the estimated prescription drug savings is generated by this reform that's going on. So that's 1.5 billion. So people are out there fighting for that 2,100 to be lower. I'm not sure where that's going to be, by the time we get to 2027. Hope for reform that moves these numbers down. But luckily and, thankfully, the Medicare prescription plan allows you and those that are eligible, to spread this cost, out throughout the year. Okay. And, AARP is always putting some things out related to this topic. You can definitely research AARP and different places that give more information related to Medicare. And our main focus, even as you get this information, should be to review your monthly expenses, hopefully, at least once a quarter. Okay. At least once a quarter, you want to know how much money is coming in versus how much month I have. And the reason being it related to, let's just say, healthcare and, other costs related to that is you don't want to not have savings or emergency funds and get surprised, right, when many of these costs could potentially increase. Okay, if the reform doesn't play out the way we want it to play, okay, your cap on your Part D, not, let alone Part A, B, and C, could be even higher, as we go into 2027. Okay, so if you are looking for, different ways, to improve your cash flow, different ways of, as we've said, to analyze your saving and spending habits, you want to improve your cash flow as you move towards retirement, a financial review, can help you identify these opportunities. Okay. You want to be reducing expenses, strengthening your overall retirement strategies. How old are you going to be when you retire? What is my Social Security going to be in retirement? What is my pension going to be? How do I distribute money from my 401k? How do I make sure my adjusted gross income and furthermore, my provisional income isn't pushing me up higher so that now my Medicare is higher? Okay. That you may be able to put some tax strategies in place, some retirement income strategies in place, just overall planning in place so that you are minimizing taxes, maximizing retirement income, maximizing that growth in your emergency funds and investments. Why? Because we don't know when some of these expenses might go up in, times of, uncertainty and, as Medicare reform and other things are taking place. So if you're looking for ways to improve that, please reach out to us. We are here to help. 301-242-3950. Always, you can go on our website, just enter in your information, email, contact information, and we will set up a Zoom meeting with you or in person if you're in the DMV. We do work in all 52 states, so don't let that bother you. If you are not right here locally in the DMV, we are here to assist. And also, as always, look for our free download, which is Retirement Income for Life. It's our survival kit that you can download absolutely free. We're here to help you with your cash flow needs, retirement needs, and to strengthen your overall retirement strategy. Automating retirement success. We want to make good financial decisions easier by automating your contributions. Okay, so that as you're making these good financial decisions, it's coming directly out of your account into investments, and that's going to continue to assist you with your consistency. Okay, life's going to get busy, bills are going to arrive, and there's going to be different priorities competing for your attention. And this is why, as a professional, we encourage automation. Okay, anybody that you're working with that's a financial professional should be encouraging, that savings is happening automatically, right? This progress will continue, as life gets hectic. Okay, as things change, as different priorities, different challenges, that automation is going to work, right? And it's going to remove the need of you to have to continue to assess on a monthly basis. You've already made the decision, you've already made the commitment, and those contributions then will happen, automatically without you having to second guess it or you having to go back through, on why I made this decision. And as the market goes up and down, you stay consistent, right? Hopefully at your job, they offer a retirement plan. And as a employee, one of the features that they will design is that every time you get paid, if it's a traditional IRA or employer plan, the money will come out before it even hits your account. So pre-tax dollars going into a tax deferred account, is very likely that your job has that. And even if you are doing this into your own savings account or own brokerage account, you want to set aside outside of what you have to spend for your fixed and variable expenses. You remember we talked about saving first, investing, saving, and then spending. Okay. And so as you're automating and as you're putting this in place, the small increases that you make to that automation is going to make a big difference. As you set some goals for 2026, but then next year, you're going to get a cost of living raise, and you're not going to spend that. You're going to save that. Automatic annual increases, to your retirement plans and contributions. That compounding interest is going to make a big difference, over time, especially if your employer also matches, as I like to say, free money. You cannot beat, and you cannot have a rate of return that is greater than free money given to you. So take advantage of your workplace's retirement plan if they offer one. If they don't, you want to set up a plan outside of work. And then in a lot of cases, you want to set up both. All right. So many savers, today, are going to notice if you raise your contributions by 1% or 2%, you're not going to notice that. Okay. But that compounding interest in that account, as you increase that and start increasing that over time, over the life of a career, wow, you could really see a nice balance, a nice accumulated account by the time you're ready to utilize that for distribution and income, when you get to retirement. Keeping in mind, as we continue to say to you, this is not a goal of perfection. The goal is that you have steady progress as you are continuing to save over and over. And once again, that automation of those small increases is going to, pay off and make a big difference over time. And systems, okay, are going to always keep this in mind. Systematic savings, systematic contributions are always going to be willpower over time. Okay. You might have the will to do it, but unless you have the system in place, you might not feel like it one month, or you might allow something that you had no idea that was unexpected to challenge that in ways that it wouldn't break your system if you already had that system, in place. Right. So, it's going to be, sometimes it's going to be hard to wake up excited. Oh, I'm making $1,000 contribution to my retirement plan. I'm going to spend 30 years from now. Okay. $500 a month. Come on. Are you kidding me? These types of things, willpower might overpower, the system that you wanted in place to make sure, you have this money saved. Your motivation is not going to always be high. Sometimes motivation is going to be low, and, the system takes the emotion out of it. Okay. Just like you don't want to make emotional decisions on buying and selling stocks, mutual funds, ETFs in the market. You don't want to, get in the habit of selling too low and buying too high. You want a systematic approach on how you are contributing as well as how you are withdrawing. Right. And this is going to help you, trust me. Automation helps you turn good intentions into consistent action. Okay. Let me say that again. Automation is going to help you turn those good intentions that you have into consistent actions. And so the best retirement strategy is, the one that keeps working. Okay. It's going to continue to work even when you ain't thinking about it. Okay. I am not, daily thinking about this while it works. Okay. You've got other things to think about. Okay. Let this plan, work itself out. You've put it on paper. You've implemented it. Okay. So now let's let it work itself. Okay. Here's some numbers for you related to automation and systematic planning. And, survey says that 45% of participants who've increased their savings, during last year, 2025, on their own or by way of just automatic escalations, we see 45%, 4 out of 10, almost 5 out of 10 Americans who are participating in this automation and increasing the amount that they put in there. Okay. 6 out of 10 are in retirement plans. Okay. If your job is offering a retirement plan, if you look to the right, look to the left, 6 out of 10 of your coworkers, hopefully you, are participating in automatic, systematic contributions and deductions from their checks into into these plans. 6 out of 10 are participating, right? And then the number even gets higher for those that are automated and contributing to their account each and every month without even thinking about it, right? It's 7 out of 10, 71% have automated contributions, right? It's not very many that aren't allowing that systematic approach to take its course. And this is what's helping people to save more over time, right? So here's a quick tip for you. If your retirement plan offers automatic contribution increases, consider turning that feature on. Okay. If it has a feature where it automatically will do it, okay, consider turning that on, right? Even that 1%, that 2%, that small annual increase, to your savings may have a meaningful impact over the long run. So as I continue to say to you, retirement success isn't always about finding more money. It's about creating long-term, consistent systems, right? Progress year after year. When I do my quality control reviews with our clients, we are looking at their 12-month, we're taking a 12-month look back, and we're seeing where we have arrived through that consistent savings plan, the progress we've made. And if that's you, if you need help with this, if you want assistance with this, just give us a call, 301-242-3950. Always, you can go to our website to set up a Zoom meeting or in-person meeting. Either way is, it's fine with us. Our website is retirement income, the number 4, LIFE.com. All right. As we're talking about different ways to save, and as we're setting up different systems of automation and, building a momentum towards retirement, one of the things that continues to come across our desk and that we do a lot of planning with on a day-to-day basis is what's called a Roth IRA. Okay. A Roth IRA. And this is a retirement vehicle that you save in with not pre-tax dollars, but with after-tax dollars. Okay. It grows tax deferred. And as you are moving towards retirement, if you have held this account for more than 5 years, the distributions will distribute tax-free. And so a lot of clients that come into our office that have big traditional IRAs where the money has gone in pre-tax and it has to distribute by paying ordinary income tax, what we look at is a Roth conversion, something that they should entertain? Is this a strategy that makes sense for that person who's been saving for retirement? It's been very important. Where you save is very, very important. And many people, when they get to retirement, a lot of the workshops and training and things that we do are related to retirement and taxes, right? A lot of tax diversification can be implemented into a retiree's plan as they get above 59 and a half. If that's you and you're above 59 and a half, the 10% penalty has dropped off related to if you took money out of a traditional or Roth IRA. And now you want to look at potentially combining the two different types of retirement accounts, right? Roth accounts are popular, okay, because the qualified withdrawals can be tax-free in retirement, okay? And so that's going to be, very, very important for those retirees that are, very tax conscious. I retired and I didn't, I wasn't able to drop into a lower tax bracket. And I really need to talk about diversification around tax planning. And sometimes this is why Roth accounts matter. Okay, so let's give you a little summary and a little review on these two accounts related to a traditional retirement, Roth accounts, Roth conversion. Traditional retirement accounts, they may provide, some tax benefits, but for the most part, money coming out of a traditional retirement account, you're going to pay taxes. Okay. So then you have Roth accounts. They're funded with after-tax dollars. Okay. Dollars that have already gone into your checking account. And then you're funding the Roth account. Also, qualified withdrawals from Roth accounts are generally tax-free in retirement. This is in general after 5 years. The 5-year rule is in place. That money is coming out generally tax-free. Having both a taxable traditional IRA and a tax-free Roth IRA income, these different income sources can provide you with greater flexibility as you're ready for income to distribute. You've got some options now with your supplemental income planning, your tax planning. You've got, options to think about. Okay. Now, the Roth conversion, this was a lot of people don't understand, is that if you are going to move money from a traditional IRA to a Roth IRA, you have to pay the taxes on that transfer. Okay. So you've got $500,000 in a traditional IRA. You want to move it all over into a Roth IRA. Well, you're going to have ordinary income tax on that whole $500,000. So how about exploring some strategies on converting portions of your traditional IRA? Maybe you do $50,000 a year for 10 years. Maybe you do $25,000 a year for 5 years. Maybe you don't want to move it all. Okay. Roth conversion strategies are for everybody, but for some people, this is a valuable planning tool that they can use to supplement their income. And so this is something that a lot of retirees need to consider, especially you in the DMV who have been good savers. Those that are coming in our office on a weekly basis don't need all of their 401k, their TSP. They're trying to figure out ways to avoid required minimum distributions or to lower the amount that they have to take out. In a lot of cases, the Roth conversion is something that you should consider. Also, retirement planning isn't only about, this year's taxes. Okay. You got to think about taxes that, may come 10 years down the road, 5 years down the road. Think about it. Are future tax rates going down or going up? I think they're probably going up. If I had a crystal ball, I would say the rates are going up. So maybe taking advantage of a lower tax rate now, converting into a Roth IRA because you potentially would have to pay more taxes in the future. Maybe that's a retirement need that fits your portfolio and your estate planning goals and, can play a key role in how you move towards your retirement. So reviewing Roth opportunities periodically can help create more flexibility later for you. The savings rates right now into 401ks and generally are $24,500. If you're over 50, that limit may be a little higher for you. $7,500 in an IRA outside your employer. And if you're over 50, for 2026, you can take that up to $8,600. And so as you are thinking about saving for retirement, Roth IRAs, traditional IRAs, these are great vehicles that you want to explore, as for future income situations, your tax situation now, your retirement timeline, are you going to retire earlier now? Is it later? You want to revisit these strategies while you are making consistent, contributions, right? And, these different things change, different focuses change, and different ideas change around tax planning, retirement planning, and so once again, this is a conversation we can have with you on a daily basis. Give us a call. We can uncover these opportunities. We have some Roth conversion software that we put in place. Just give us a call, 301-242-3950, or schedule a 100% free consultation on my Calendly link. That's at retirementincome4life.com. Just request that meeting right there online. We are here to help and assist you in, any of these strategies that you may be thinking about. All right. As you are putting all this together, as we continue to emphasize, it's a lot of noise out here. The market's up or down. You're getting a lot of feedback from different people in different situations. And this planning, all that we've discussed, all that we always discuss, helps you avoid making emotional decisions. Okay. The markets are going to move. The news is going to change. You're going to get different things from your president. You're going to get different things from the economy. Different predictions are going to come. They're going to go. Different challenges around the world. And investors need to avoid making emotional decisions, especially during periods of uncertainty. Okay. And especially right now, fear can lead people to sell at the wrong time and getting overconfident sometimes, fearful sometimes, don't have a risk tolerance plan in place. And unfortunately, emotional decisions can be very expensive. Okay. Market downturns can make investors question their long-term plans. Okay. When the market goes down sharply, okay, it tempts investors to change their whole plan, to chase performance, to, in a lot of cases, make bad decisions historically based on market comebacks or market peaks. Whether you're selling too low or buying too high, both of these reactions can lead to decisions that hurt your long-term results. Okay. We've got to be disciplined about this. Discipline often outperforms activity. Okay. Just because you're making a lot of trades here and there or moving money back and forth, that might not be the most disciplined approach. In a lot of cases, you need to stay the course right where you are. Right. Successful investing doesn't require frequent changes. Okay. It doesn't require, it requires you sticking to a well-designed strategy and constantly not reacting to headlines. Okay. Headlines are going to be emotional, not systematic, not consistent. And timing the market is very difficult. The more time that you actually stay in the market, not trying to predict short-term, wins or, how long this is going to last, but the more you stay in the market for the long term, the more good outcomes we see that are happening, day to day. So, let's kind of tie this together. Focus on what you can control, right? You can control how much you spend and save, right? You can control, your asset allocation, what your risk tolerance is, where you want your money. You can control year to year what my long-term goals are, what my spending habits are, right? These are the most important things to, put in place consistently, not what's going to happen next week or next month in the market. Retirement success is often determined by your behavior. Okay, listen carefully. Retirement success is often determined by your behavior, not the forecast. Okay, not the forecast that you hear, month to month or week to week. Okay, and so before making any of these major investment decisions, ask yourself, am I responding to a long-term plan or are short-term emotions, helping me make these impulsive decisions? Okay. And so once again, we're here to help with a long-term plan. We'll help review what you already have. Let us know. Give us a call, 301-242-3950. Always on our website. You can set up a Zoom call, a one-on-one meeting right here in my Greenbelt office. Retirement Income, the number 4, life.com. We are here to help you. And that puts us into our final topic of the day. And this is how financial professionals help to keep you accountable. Okay. A lot of retirement plans look good on paper, and a lot of plans, can look good, in a down market versus up market, or, the challenge here is sticking to, when life gets busy, the market gets volatile, your priorities change. What is important is you stick to that plan. And I would hope you have an advisor. I would hope you have someone in your family. If you need accountability, we're here to provide that. Okay. And it matters most when markets are down. Okay. Because that's when you're getting emotional. And, it matters most after a major life event, when someone passes away or you lose a job, or, when retirement gets closer and now you're panicking, thinking you're going to have to work for the rest of your life. When emotions are, driving decisions, that's when this accountability really, really matters. Somebody you can bounce off of these different challenges that you might be facing. This is a marathon, not a sprint. Retirement planning is an ongoing process, right? You don't make a one-time decision on retirement plan. This is year in and year out. Hopefully you've been doing this for 30 years. Hopefully, if you're young, you've started, early, but even if you're at that midpoint, it's still not too late, because, your plans are always going to need adjustments. Okay. Income adjustments are always needed. Expense adjustments are always going to show up. Healthcare, your family situation is going to change. Your goals are going to evolve. Okay. And so the accountability that you can put in place through your advisors, provide regular check-ins so people can help you strategize and continue to reflect on your current priorities that, may change over the years. And in June, one of the good things for people to do is to schedule a mid-year financial review. Okay, we're doing our mid-year reviews now. We'll be doing them in June and July. And even if your goals haven't changed, reviewing your progress can help you with, your retirement strategies as you move forward. Get that second opinion, talk to your CPAs, talk to your attorneys, talk to your financial advisors. A second opinion, even if you have one, is always good. And, like I said, we're here to help with retirement planning, your investment planning, short-term, long-term. Reach out to us. We are here to help. Our approach is always starting with you. Okay. If you have a retirement plan that you have already in place, it should be about you. If you're beginning one that you want to put in place, or you've got pieces of one that you want to, execute, it should start with you. Okay. And what does that mean? It's understanding what you want this to look like at the end, how much you can be, save now while increasing, systematically. Are you looking to travel in retirement, move, give back, peace of mind, whatever it is, a deep dive needs to be taken into your current plan, whether you have one or not. A deep dive needs to be, you need to be held accountable to that deep dive that you want to put in place, or already have in place. This allows for gaps to be filled. Opportunities, you may be missing opportunities you don't even know about. I'm doing this on a daily basis. You may look at this once a year or once, every few months. Gaps can possibly be filled to help lower risk and help to increase income opportunities. A clear, personalized strategy, focused on income, focused on growth, focused on security, focused on asset preservation. Accumulation strategies while you're working are not the same as income distribution strategies when you retire. Okay. You've got to get these questions answered along the way. You don't want to be in a position where you're being rushed or pressured by anyone. Open conversations, open consultations with no strings attached often can get you the clarity and the confidence you need. It'll allow you to take next steps, and most importantly, the accountability is going to help you take action. Okay. If you have, this is a journey that you're on your way down on the road, and somebody's tapping in on a daily basis, a weekly basis, a monthly basis, a yearly basis. If you have that accountability, ongoing, you will more than likely implement and take action instead of just have it on paper or simply just be talking about it. All right. 301-242-3950 is how you can reach us. Our website, retirement income, the number 4, life.com, is where you can also schedule your free consultation. All we need is your name and email, phone number, and we can set up a Zoom meeting, a in-person meeting if you're right here in the DMV area. Don't forget also to download our free Retirement Income for Life Survival Kit. That's absolutely free. It's downloadable immediately right on our website, Retirement Income for Life. .com. And so let us help you. We're here to encourage you. We're here to make sure you are strategizing and getting the financial literacy that you need in order to map out a retirement income plan for life.